Hello and welcome to UK Market Missions Week 2. Hopefully you all had a good weekend, although some of us are Monday morning, many of you are Monday afternoon, so definitely well into your Week 2 as well. Just wanted to recap briefly on last week. Of course, we had 23 speakers talking about 9 immersive sessions and some really interesting subjects that were covered around obviously the UK fintech economy, and how the COVID era has affected it, and of course the support available. We heard from government and industry experts, free trade experts, and of course around the regulatory environment. And certainly I came away with some new learnings, many new learnings in fact, so hopefully you did as well. So this is week 2. We'll focus very much on the more commercial aspects of UK expansion, from commercial strategy, of course, the upcoming session, to customer insights and brand awareness. And of course, we'll also hear from investors on funding and founders who've made the journey here before. In fact, today's a great day for Newfound. One of our clients from a couple of years ago, Kogo, has just today announced a major commercial deal with NatWest Bank. And that's a real game changer for them. We brought them into the marketplace and have worked very closely with them over the last couple of years. So it's always good to start the week on some great news. Before we move into session 2, wanted to just remind you all of the UK Market Missions Pitch Day on the 29th of September. So tomorrow week, Tuesday next week. And that will give the whole cohort the chance to present your businesses to the UK marketplace. So on Thursday of this week, after the final mission session, so session 2, we'll give everyone in the mission cohort a briefing on what to expect at the pitch day and to help you prepare, of course, as well. And you'll definitely get access to potential customers, investors, etc. So well worth being there next Tuesday. So moving on to the first session, and it's once again very commercially focused. We're looking at how to build traction and grow revenue within customers in the UK. And I'm pleased to welcome 3 great panelists and a very good moderator, in fact, an excellent moderator in Dan Lowther of CC Group. CC Group's a partner of Newfound and been fantastic working with us over many, many months now. And so with no further talking from my side, I shall pass you over to Dan. Thank you, Dan.
Thanks, Pete. Good morning or good afternoon, depending on where you are in the world. I'm Daniel Lowther and I head up Fintech at a PR consultancy called CC Group, and have the privilege of working with Fintech brands, both great and small, ranging from Visa to Revolut to Rabobank right through to Clearbank. So looking forward to talking about how to influence buyers and the sales process for large UK enterprises and financial institutions here in the UK. But before we hear from our expert panel, I wanted to share some insights with you, sort of hot off the press. So if you just give me 1 second, I'm going to bring a deck up. So we'll just run through this for a couple of moments, and then we can move on to the panel. So just a very quick bit of context. Once every sort of few years, CC Group runs a piece of research called How to Influence Fintech Buyers, where we go and ask large enterprises, particularly banks and fintechs, what influences their choice of partner or vendor. And why do we do this? Well, we believe that insight is essential to understanding how best to influence fintech buyers. A lot of brands, both large and small, their sales team, marketing teams often don't have the quantitative data on how decision makers at major financial institutions and fintechs select technology vendors. The difference as an agency that we got between seeing consumer briefs, which were really big, thick documents with lots of demographic insight, buying habits, where the buyer was, versus B2C is actually quite different. So to help our clients we decided to take it upon ourselves to do our own research. And this is the result of research into 100 purchasing decision makers at large banks, all very large, all over 1,000 employees, and fintechs over 300 employees. And this is the first time this research is being shown. So you guys are getting a bit of a sneak peek, as it were. So they'll be available to anybody who's interested in it. Please do contact me through the newfound team. So without any further ado, I'll quickly whip through some results, and hopefully they'll provide some useful context for the following conversation. So the buying landscape. So based on banks and fintechs view, both in the US and the UK, the average ticket price for familiar with a sort of 6 to 12 month sales cycle in this space. That's about 4 49% engage at discovery, right? And 23% engage at shortlist, with 27% engaging at 23% engaging at long list, and 27% engaging at shortlist, and 4% engaging at purchase. Now, what that means is that 31% of buyers will engage with you at the shortlist or purchase point. So your buyers will be reviewing you, discovering you, potentially even adding you to long lists without you knowing it. So the importance of your external perception within the market, frankly, how good your website looks, is really, really important in this space. And finally, in terms of stakeholders, there's an average of 6 to 8 different stakeholder groups. That's in terms of internal departments, especially within banks. And the 3 most influential are IT, procurement, and strategy. And when you look at that, that makes sense. IT is, don't break it. Come in, don't break it. We love our operational resilience. Thank you very much. Procurement is, we want good value. Strategy is, are you going to solve a problem? Are you going to take our business further? Are you going to introduce a new product or a new function that we didn't have before? And now I'm going to look at 3 different things. What channels most influence selection of vendor or supplier? What content most influences, and what attributes? And as you can see here, there is a massive emphasis towards expert validation and industry recognition. Peers, I hear this anecdotally all the time. You know, you're talking to a bank, a CTO at a bank, and that CTO will call their CTO mate, another bank, and go, have you heard of this company? Do you think they're any good, etc. So peers, consultants, influencers, analysts, people looking for expert validation, but also media comes up by here quite. When it comes to content, people are looking at evidence and insight, right? So people want to read analyst reports that independently validate your viewpoint or the message or the proposition you're trying to put onto the market. And again, looking over to the right-hand side, you can see that more shallow media is not delivering the same kind of influence on purchasing decisions. So things like blogs or video content, people want in-depth insight or evidence-led content to alter the opinion of a vendor and hopefully then result in a shortlist. And then on to the third slide, what attributes? Business understanding comes up top. People want you to demonstrate that you understand their business, you understand the market, and you can perhaps challenge them and open up ways or thinking which they haven't considered before. Reputation profile is really important, increasingly so as this industry moves out of adolescence and into maturity. I think fintechs, especially the larger ones, are taking more stock in their industry industry reputation and credibility and what that brings, and that's really, really important from a shortlisting perspective. And then the third one I wanted to notice, I know the panel will touch upon this, is open and collaborative. The market is set up in a way at the moment that partnering and collaboration is really the name of the game, especially through industry initiatives like open banking. So it's important that fintechs demonstrate that they play nicely with other partners and that they're simple to integrate, they're simple to work with, etc., etc. So that's a few little insights, which I hope everybody found useful. I've seen some comments sort of pop up, and hopefully we can come to any questions around that in the Q&A. But I'll stop talking now. I'm sure you'll be very glad to know, and I'll move over to introducing the panel. Just give me 2 seconds. Wonderful stuff. I think if all the panel can come off mute and open up their videos. Wonderful stuff. And what I'm going to do is I'm going to turn to Adiza and then Alan and then John. Good morning, everybody. And I'll ask each panelist to just introduce themselves and provide a few words on their background and their sort of relevance to the session, and also ask for them to provide a sort of a couple of minute opening viewpoint in terms of how they believe fintech should be sort of building traction and driving their sales pipeline in the UK. So without any further ado,
Adiza, I think you can introduce yourself. I think Dan's having bandwidth issues. Please go ahead.
Hi, good morning. I'm Adiza Tajani. I look at digital product innovation and partnerships at HSBC. I have been in this space for a number of years now. Before joining HSBC, I was at a Californian open banking fintech, pre-money, and then also when we raised a lot of money. And before that, I was at Level 39, which is a fintech incubator and hub, and also rolled out the payments system there that the companies use to pay us, and built out the partnerships piece with a number of different industry stakeholders within the ecosystem. I think that the topic today is really important because there is sometimes a bit of a misalignment on what is actually needed to get to a high level of collaboration and in the end a buy for some players within the fintech space. And I think that comes from different levels of maturity of understanding your buyer. It is so important to Dan's point, the levels of decision making that that come across for us internally is quite in depth. And so when you are working with a partner, you do need some of that understanding on how long it can take to get things through and to build internal buy-in, and then to get to a purchasing decision. And I think that each organization, each large FS organization works slightly differently, but generally we have similar models. And we do talk to each other, and we are aware of what's going on in the space. So I think that any company that is looking to enter the UK market needs to make sure they hire the right talent to help them with that, and that talent and the team and ecosystem that are helping you do that have the depth and experience of doing that, because that is key when I'm talking to different stakeholders across the industry. And as Dan said, we always do have our eyes open. So we are always looking, watching and understanding what's going on and talking to the market all the time, which then influences decisions that can take up to 12 months sometimes.
Thanks, Adiza, and apologies everybody for my horrendous internet. You can Virgin Media. Alan, over to you, sir.
Hi there. Thanks, Daniel. My name is Alan Hamilton. I'm the founder of Bridgepoint, who for the last 5 years have been helping tech companies come into the UK and UK companies expand internationally. Prior to that, I ran a small fintech based in London called Equipos, and we sold into the finance sector in client reporting and institutional asset management reporting. We had some success with that, and I grew that business from $1 million base up to 10 million through expansion into North America, Canada, and the US, and also into Asia as well. I've had experience also bringing a small New Zealand company based in Wellington into London, and moved their headquarters from there to here and grew that business out. It wasn't in fintech, but I understand the challenges of the activity and the time schedules and all the other things around that. The culture of what you do there and what you do here isn't that different, but from a fintech perspective, really what you need to do is build out an ecosystem of partners that will give you credibility with the relationships based on them, and also bring you the knowledge that you need to enter into this market. There's a wide number of partners, and we talked earlier about an ecosystem there. I built out an ecosystem with Equipost, which was significant in the sense that it covered everything from global consultants, niche consultants in fintech, which I think are the most important ones to use to get into them, both leveraging their knowledge and sometimes their ability to deliver your solutions. Also building out and working with the market influencers and speaking to them on a regular basis to everything from Gartner down to the other smaller, more niche groups. But make sure that they know what you're doing. They'll be interested in what you're doing. They'll also market your product to others when they realize what the capabilities are. And I think also, there's a lot of talk these days about not just selling to your clients, but partnering with them. That can be a significant challenge, and it's never a silver bullet or an overnight success piece. Selling into fintech really does take a lot of work and a lot of building up of the piece. You need to build in the right people and get as much leverage as you can as early on from other partners in your network to understand who you're really targeting and what you're bringing to the market. That's where they go. That's where they get their influence from and their information on that. All the marketing and brand building in the world will be useful, but that's not going to help you win the deal. It's the partners and the relationships you build that will help you do that.
Thanks, Alan. And I'm glad our thinking and the research is demonstrating sort of serendipity there in terms of consultants and influencers. And I think from a PR perspective, and I've worked in different areas, different industries, I think fintech is the most heavily influenced by influencers. There are a small group of people that hold almost a disproportionate impact and effect on how different vendors and different technologies are viewed. John, over to you, sir, for a sort of a short introduction and your kind of personal viewpoint on this issue.
Well, thanks, Ben, and good morning, everybody. So I'm John Salter from ClearBank. I run the front office at the bank. I arrived at ClearBank via Royal Bank of Scotland, Deutsche Bank, and Lloyds Bank, and have run global and regional sales teams basically my whole career, specialising in payments and transaction banking. So it wasn't a big leap to move to ClearBank. Those of you not familiar with ClearBank, we started taking clients on in 2018 here in the UK, and we're the world's first and still currently the only bank that's 100% cloud native, built on Microsoft Azure. And what we do is we provide direct access to all the UK clearing systems. We're effectively an infrastructure bank. So we power other financial institutions to execute transactions in the UK. All of them are regulated, so we have the whole spectrum from credit unions, banks, new challenger banks, building societies, and pretty much every flavour of fintech you could probably all think of. So, and we're having reasonable success. We're over 120 clients live now. So some of the stuff that we'll go through today, I was doing 2-3 years ago. So I'm probably quite, some of the scars are quite fresh even now. Probably not much nothing particularly new to add to what the rest of the panel and Dan was saying, apart from probably a couple of gritty things for me. It is everything we do here in the UK and the institutions you're targeting. It's a long sales cycle. So everything in my first thought every day at work with the team is always about front. How do you stay front of mind with the clients you're trying to target? How do you stay relevant? How do you stay visible? When they are making that buy-in criteria and start that assessment process, how do you make sure you're visible and you are someone on that list, be it the long list, short list, or any other way they try to consider that? That is, and we'll touch on, I'm sure, clearly marketing is quite important. Being very clear around what your brand stands for, and how you position it in the market, I'm a massive fan of. I think people, as people have already mentioned, is really important. And for me, I think having a really good board supporting you is important. Certainly in the earlier days, using their context, their influence is really good. I think probably the most important person, that is a highly visible CEO in the UK, someone that can be the focal point for those conversations, and again, use his context and be the voice of the company. And then I think, as we will all talk about again, I think working out who are the right partners to unlock the various doors on that journey to the sales, the final sales contract, is critically important. And the increasingly more than ever, in my view, the influencers and partners are critical as you launch new product into the UK. So certainly that's how we approach it here at ClearBank, and that's how we're doing it every day. Dan, thanks.
Wonderful. Thanks, John. So we're going to launch into a bit of a Q&A. If anybody has any questions, then please drop them into the chat. We've made a little bit of time before you have the opportunity to meet the speakers to answer those directly. But first, I'm actually going to come straight back to you, John, with sort of my first question, and that is really, it's it's hard to avoid what's going on in the world. And with the global pandemic, the downturn, obviously there's a lot of talk, especially in the UK at the moment, of potential sort of second lockdown. How do you think that should alter the approach of fintechs talking to sort of large enterprises and banks? And also, I don't know whether, Adiza, you feel like jumping in on this, because I know that when we were rehearsing, you talked about on-fire problems. And I imagine a pandemic brings plenty of those. So I don't know if you have a viewpoint there as well. So, John, I'll turn to you, and Adiza, I'd welcome your thoughts on this as well.
Yeah, it's something I'm wrestling with last Friday, and I'm wrestling with again this morning. The threat of the lockdown. I mean, what your macro view, it just continues to slow stuff down. It's a double-edged sword. So as we work in it, you need patience in this business, and I think this is really testing our patience and resiliency. So the pandemic, as always, any crisis presents opportunities as much as problems. So I think if you look at basic sales 101, the face-to-face meeting is impossible. People buy from people as much as everything else, as much as influence. So that makes it quite difficult when you're getting to, front of mind and know people. That's quite a challenge, because you can't sit in a room and you can't have a conversation. So these sorts of things have to work. And that means we're still, globally, people are still trying to work out how to effectively remote sell. There's lots of courses and training, but the reality is people are still getting familiar with that sort of thing. So what we're starting to learn there is your clarity of message. You've really got to be clear on what you're saying, why you're saying it. So doing more research up front is critical. It's hard to have the classic leave behind pitch book where you've gone in, you've got collateral, you can get a reaction. But you do need something. So that you need to think very carefully around how you manage those meetings, what's the contents of those meetings, and how you're going to drive them. It's really hard to get feedback in those conversations. So I think what we find is you need to have lots more meetings, but they need to be shorter in duration to get underneath the issues and the opportunities for the clients. So, and then the quality of the follow-up is really important. If you're going to get the next meeting, you better follow up well. So the pandemic is, in terms of how you go to market, is proving an evolving feast. People are adapting to it, but it's still taking time. On the upside of that, you're right. There are definitely issues coming up. We talk to people. People can't pay. You take checks, just the old mode way of making payments. People can't get into branches to pay in their checks. So there's a whole plethora of opportunity from all the big institutions, and help me solve my check problem, both corporate and retail.
So if you're sorry to interrupt you. So if you're perhaps in certain parts of the ecosystem, I imagine anything to do with remote working, digital enablement, digital identity, proving who you are without being in a physical location. And I mean, I understand obviously ClearBank has sealed a number of deals during this period, both with large financial institutions as well as fintech. So there is obviously a requirement from some financial institutions to spend to deliver some of the digital transformation which is necessary to get through this pandemic. Is that correct? Is there a certain level of, if you're in certain businesses, actually business can be booming at the moment?
Yeah, there's clearly, yeah, you couldn't, I mean, one of the upsides of this is people are getting time to make decisions. So your meetings have become much more structured because you've got to structure them. So actually, in some ways, you can accelerate the process once you can get through.
Yeah, that's interesting.
So because people are not taking meetings for the sake of it now, they are, people realize how hard it is to get committees together, so they make it, people are prepared to execute. The trick's getting into the right conversation at the right time, and that's always been the challenge from physical face to face to this. Getting those right entry points at the right time in the buying cycle is the trick. I don't think it matters what product you're in. The buyer's the buyer. You need to get the right time.
So towards what Alan was saying, and sorry, Adisa.
Oh no, it's right. I would add that a key piece that a lot of people forget is the follow-up. I think that it's such a attention to detail piece, but you really need to follow up and do the actions that you've described in the follow-up. And I think that actually people have become more focused in their meetings, and so partners that are able to follow up clearly, succinctly, and actually hit the timeframes that they say they were going to hit, it just makes everything easier, because I think that sometimes it's the alignment isn't really understood, that actually what you're talking about with the partner, you then have to go and ratify that with, as John said, a number of different stakeholders and people internally, and that does take time. And so if you put something forward and then you change the time frame, it's not really like how you change the time frame if you're in a small company. If you change the time frame and say, oh, you know what, I'm going to get this proposal back to you in 24 hours, then don't say you're going to get it back in 24 hours if it's not really feasible. Just say it's going to be 48 hours, because that information has a ripple effect. And I think that actually during this time, that's the piece that nuance in how certain sales teams have approached things is also a nuance in how they'll be when your product is live. Because once your product is live, what you hope to have is that consistency, nuance, and understanding of where things are going. And so I think that actually some of the buying decisions are becoming a lot clearer because of the way certain players and partners are acting, because ultimately there aren't that many people within institutions that are focusing on this type of work, the number in comparison to running the day-to-day. So actually we're very time poor. So making sure that you do follow up in the way that you say you will, and actually it's okay to just say, look, I need 2 more days, or it needs to be next week, because we're all human, we all understand that. And I do think sometimes there's this misconception that being fast is amazing. Yes, being fast is amazing, but being fast and delivering what you say you're going to deliver versus delivering a half-baked piece or pitch proposition is just not worth it. It doesn't drive up your credibility. It actually slows your credibility down.
So there's an eagerness perhaps which people fall into, which can undermine, I suppose, the fact that this is the actual sales process is very much a dress rehearsal for working together, and the kind of demeanor and ability to pay attention to detail and things like that, that's going to be carried through to what they believe a long-term relationship is going to look like. And I think it's really interesting that, so what the picture we've painted quite early on here is one of, it's actually very hard to make those connections. You have to build the right partners, you have to know the right people, but actually when you get through the door, things can move very, very quickly, especially if you approach it in the right kind of way, as you've pointed out, Adisa. Which actually brings me nicely to turn to Alan, and I think the majority of the panelists here are going to be interested in in selling to probably large financial institutions, but also some fintechs, also other enterprises, payment companies, accountancy firms. There are lots of different routes and channels to market here. How do you see approach differing between, say, some of these larger organizations and some of the other ones?
Large compared to small, or fintech compared to others, or?
So large financial institutions versus, say, smaller players, so smaller fintechs or other enterprises.
Well, what I would say is the larger institutions have probably a 3 to 5 year schedule of projects that are going to be deployed over the period, and they've scheduled things. The things that they've moved to make the bank do things differently are over a longer period of time in big organizations. So it's very, very unusual to walk into a very large organization, have the right product at the right time, and get it deployed inside 3 to 6 months. Almost certainly, either they won't have it in their budget, or it'll be sometime in the future. And they typically work on the basis that if it isn't broke, don't fix it. Don't try and fix it. If it's long-term and strategic, then it will take a long time to deploy. And the third thing is that they'll always take a view that says nobody's really got a promotion on a spectacular. They worry less about promotions and spectacular deployments than they do about getting fired for a major screw-up. So keep in mind that their decisions are going to be based not on how great your product is and how valuable it could be. It's how critical that is to the system and how careful they need to be in bringing it in. That all says that it's just going to take a long time to get in.
Do you think people overestimate the we're coming here with something new that's going to change things, very jazz hands, if you will, rather than, by the way, if you work with us, we won't break anything. Your CIO can sleep easy at night. I know operational resilience is a big watchword at the moment in the UK, and regulators are looking at how banks have let services drop. And I imagine top of their list is not how can I make it necessarily better, but how can I make sure it doesn't break?
Oh, absolutely. And that's going to be with the operational projects. You could be spending a lot of time in the innovation sector. And by the way, the innovation, chief of innovation is somebody you should know in every bank if you can find them. However, they are quite remote from operational deployment in the sense that they're a sandbox. They're playing with everything and they're trying everything out. Be careful that you don't spend too much time with them. And every deal, there's an arc. There's an arc from the beginning of it to the end of it. And there's an amount of work that happens in that arc. And you can spend a huge amount of time in that whole set of work you're going to do to win a project before you actually get a commitment to engagement. So you have to make sure that you are talking to the right people. I mentioned earlier on a previous conversation, make sure you follow the money when you're engaging with the big organizations. There's too many people in them that you could speak to who won't be able to make a decision. So you can quite often get lost in that. Where in smaller organizations, you can speak to the head of the business or the senior IT director, the investment manager, whatever you're talking to, and you'll be talking to the senior ones. In very large organizations, it's hard to get to those. The one thing I would say about large organizations and banking in general, if you're in a startup and you are selling and you're doing a good job selling things, financial institutions pay their bills on a very regular basis. I've never found a problem collecting money off a bank or an institution if you've done what you said you would do. And so they're very good at it because they have a lot of money. That's the first thing. And there's a lot of money moving around the system. So, they are very good for that. But you have to meet the stringent criteria that they specify, make sure that you do.
And I would say that, to add to Alan's point, that the structure within different banks of how things come into the organization can be quite vast. So you do need to find time understanding that. And so, for example, I know some fintech stakeholders that if they meet anyone that has innovation in their title, they just won't talk to them. And you're sort of like, okay, great, but actually you don't know that innovation sits within product, which product manages day to day. Or so actually understanding who you're talking to, which is 101 of sales, understand who you're talking to and understand them properly, it does take time, but it does pay off, because in the long run, that is important. We have such a long tail of different things, and I have heard from different stakeholders that salespeople are getting pressure from fintech CEOs on why is this taking so long, which then actually looks like a signal to me that the CEO doesn't understand the time frame that is needed for the salesperson to get in front of the right people, to get the right stakeholders, and to do some things. There are some things that can move really fast, but it does need to, figuring that out and working that out properly is really important. I think that John can talk to that in a bit more depth, as he's got a more longer career than I do.
Now I'm old, is that where you're going with that?
Just more experience, John. Just more experience.
Experience is the best thing. I'm only 10 years in, so.
One thing I'll throw in, you triggered a thought I've seen developing in the market, which I'm seeing as a habit, it might be a pattern, is for those really interesting larger projects, we're seeing the bank or the financial institution, and I mean that in a holistic sense, the spirit of partnership has become, if you're going to be a serious provider of services for the medium to long term, the bank or the FI actually takes an equity stake in the company. And for me, that's quite an interesting development in the last couple of years. And if you're coming to the UK for the first time, mentally, are you prepared to let go of some of your company to win a contract? It's a slightly different buying pattern that's evolved and has been quite visible recently in the market. And it's just something that probably wasn't happening that often 2 years ago, but it's definitely happening right now. And you'll see most of the big banks are taking an equity stake in what they could describe as strategic partners. And that's one of the measures, I think, in that you wouldn't have seen in an old-fashioned procurement process of, are you prepared to sell me 5% of your company? And I think that's something different.
Well, I've always been interested in this, and I'm deviating massively from the plan. Sorry, guys, but what do you guys think of that investment in a fintech? Because I mean, you can see some big ones. I think Thought Machine had a stake from Lloyd. I think Lloyd's took a stake in them as also bringing them in to build out their core banking system. Doesn't that put other organizations off working for you or working with you if you're so heavily affiliated with a potential competitor?
So as I caused this problem, I suppose I should support the question. So it's a personal view, because I think it's difficult to call, but certainly where I've seen it in the market, yes, I've seen other people go, no, that's Lloyd's, as you use the Lloyd's, that's Lloyd's partner, so we're not going to talk to them, let's go find another one. So you get that point in your survey, Dan, about peers and how do you select, and I certainly see people copycatting that approach. But yeah, my opinion is it's very difficult to see how one of the big boys takes a stake in your company. I think it can be a limiting factor to elsewhere, other opportunities, and then you've got that philosophical debate of, you know, this is my company, this is our fintech. We've got to grow. I believe in the proposition. Why do I want to give it away? You know, the Dragon's Den thing. Why do I want to give something away? If you really believe in it, you can pay for it. So it's quite a philosophical debate, but I think it can be a blocker in the longer term. Yeah.
I see the head of innovation for D&B out in Singapore once said that they would never ever take any equity in any of these small businesses, because why do we need to as a bank? We need to help the ecosystem to grow, not sort of start to create vested interests. But anyway, I feel like we're going on a side topic, albeit an incredibly interesting one. I'm going to turn to Adiza for a sort of I think a really, really pertinent question, which we've kind of touched upon. What are the common mistakes that fintechs make when trying to sell to fintech firms? What are sort of the things that you see on a pragmatic basis, other than, you know, maybe not giving 48 hours instead of 24 hours for follow-up? But, you know, what are those things that everybody in this room needs to sort of take stock of when they're talking to large institutions?
I think that it's important to understand who you're talking to and to understand that earlier on, because if you you're trying to figure out whether or not they are an influencer to the buying decision, whether they are the budget holder to the buying decision, whether or not they need more information to take back to the person who they have to then pitch internally to. So I think that really from an early stage, figuring out who the right buyer is really important, and how are you helping them solve that problem. And it takes such nuance, and actually you do need to be a good communicator. And that's one thing that I think is a bit underestimated when it comes to this debate. You do need to be very good at adjusting to how communication styles. So I think that, like, I work with stakeholders who are not in the UK, and so I need to be able to talk about whatever I'm talking about via video chat to pitch it in, and have the mechanisms to and resources and knowledge to do so. So if a fintech makes that easier for me to do, that is great, because if not, then it means that I have to then go and build a new deck and make sure that it works well, fits into certain core areas, and then channeling it in. And so I think that understanding those nuances is important, and trying to get that from whoever you're talking to as early as possible is key. And it is hard, right? It's not an easy thing to do, and that is why you do have to pay more for talent that have got some of that experience of selling into large FS. And I think this is where there are regional differences, because in some regions, some salespeople have to come with their deals in their CV, versus in some regions you don't really need to do that. So whoever you are sending to represent you needs to have that understanding of that buyer, needs to understand the nuances of how to communicate to that buyer, just as you would if you were looking to communicate externally to different players. I just think that is so key, and those nuances are really important. And you can do the references piece of speaking to other stakeholders of, oh right, is this the right person to talk to? And actually also considering that within large organizations, people's roles do change. So checking in to see whether or not they are still the right person is also is also important. And I think Alan touched upon it when he was talking about the nuances he found when launching into new markets. You do need to take the time to, as you would with anything, to understand the company and the buyer that you're talking to properly. Not sort of, oh right, we've had 2 coffees, great. Not that we'll have any physical coffees anytime soon. It's more a virtual tea.
Yeah. Thanks, Adiza. We've got about just under 10 minutes left, and I wanted to touch on some of the Q&A. And I actually was going to turn to Alan next and talk about sort of best point of entry to building new partners. And actually just seen a question which kind of touches upon that. So there's a question here of saying, any thoughts on engaging customers direct versus through sort of system integrators, outsourcers, primes, or incumbents? I thought that might be one for you, Alan.
Absolutely. Operate in a direct fashion as soon as you can. Be absolutely aware that the broad restrictions on banks being able to engage with you is critical about how resilient you are as a business. And so you can't suddenly have all the credibility in the world. In a fabulous startup with great product, they'll bring you in, but they'll know that the challenges will be that you won't be a particularly resilient company, and that your people could change, situations could change dramatically. So they're often concerned with that. To give them some comfort, then they will work with trusted partners who will then support you in the process of getting in and solving the problem that the bank has at the time. So really, there's some problems you can solve and some problems that you can't. Also, you may have a terrific product and you may have a limited resource in terms of being able to deliver that to the clients. So they will often have services teams and other companies who are very good at doing just that. So building out their capability of delivering your solution into a bank that they already have trust with is a very straightforward way of getting it in. But make sure that you're giving them the services to do that there's a two-way relationship in doing that. Working with the big SIs and the big global consultants, you really have to be in a relatively mature position to be able to leverage those, because it will take you an awful lot of time to work with them to get you to the point where they will be bringing you into a big bank. In fact, you almost have had to work with them at once sometime in the past before they will invest the time they need to bring you in. So, you know, it's always, everybody's trying to build out credibility and reliability. It's about resilience of the solution, both in terms of not just the technology, but the delivery mechanisms. So, you know, I would say it is essential to partner. As soon as you're big enough that you can start going in with a team that can solve the problem, then be doing that. But don't stop working with other partners, because they will be, typically in any time I've grown business, more than half of the revenue has come from partner-led initiatives. And that means that your margin may be lower, but it's still a major significant part of what you do.
Yeah, I think a lot of people take a land and expand sort of approach. I think that works quite well. And actually, there's a question here from Bruce, looking at what the kind of the right partners for an Azure-based service, which is doing very well by the sounds of it. And I suggest actually for sort of more specific recommendations, pop in and chat to any of the guys and then meet the speakers afterwards. I'm sure there actually might be some names that they can share. Another question here we've got from Anthony Aarons, and that is, we heard a lot about client-facing products. What are the UK financial institutions doing in terms of their internal cultures, processes, in preparation for a post-COVID world? And just on that point, Simone Joyce has also acknowledged the Fintech pledge, which I don't know if the panelists have seen. I think I saw something about this last week, and that banks have recently signed, looking to address time frame issues and reset expectations on both sides of the equation, both Fintechs and FIs. So I think both those questions are around, you know, not just how do you get into bank procurements, but what is that procurement process like? Is it more fair and equitable? And has the culture around it changed a little bit? And I remember, you know, only sort of a couple of years ago, sort of hearing reports that, you know, Fintechs very much felt treated like vendors going through procurement and not like partners. And I don't know whether that has changed. So open question. I don't know who fancies taking that one.
So we have committed to the pledge, and our Chief Operating Officer for the UK, Emma Burnell, put a statement out about it last week. And I think that it helps improve transparency on the different types of hurdles there are, but there is still no one size fits all, because when you are buying a technical product, there are certain decisions that you have to go through depending on whether or not it's hosted in a certain place or how you want to put things through.
Okay. Any more thoughts from other panelists on the approach from the procurement department and whether things have changed over the last couple of years?
I guess going back to kind of part of the other question, our observation here is just pragmatic. Is everyone is where we are in the current crisis with the COVID problems and economic recession accelerating, not decelerating. Something Alan said: resiliency and reliability are probably the most important thing. Alan's bank is spot on. You know, people are going to get fired for making a dumb decision. So procurement processes, in my opinion, are going to get tighter, and they're going to be more emphasis around show me you're the right partner and that you are not, you're going to be here for the longer term, and demonstrate your sustainability and your own internal resiliency. So I think that the emphasis of procurement from being a really interesting, revenue-driven, sexy idea has its place, but I think pragmatism is already starting to come through the last 6 months. That a lot of those really sexy projects, if I can call them sexy, are interesting, but right now this is survival mode for a lot of people. So I think timings and knowing where your product fits in the current environment in this country is really important, because a lot of people are cutting costs, battening down the hatches and trying to get through the next 18 months. And so the emphasis has shifted. And certainly I've seen procurement processes recently where they have really reflected the regulator and talked about scalability, resiliency, reliability, security, more disproportionate to, or tell me what value you can create over and above that. It's almost, unless you tick those boxes in big, bold green, what is it you do, by the way, is the secondary question. And that would be my observation. It's going to get tougher for a while, not easier.
Brilliant, thanks, John. So we're approaching the end of the session before you guys get to go off and have a chat with the panelists directly, if you so wish. I'm just going to turn to each one of the panelists and leave them with as Jerry Spring used to say, a final thought. So John, over to you. Any final thoughts for the group here?
Yeah, I think the most important person in a sales pitch right now, and I wrote down here, is beware the incumbent. The incumbent can be your biggest challenge, but also your biggest friend. And that's back to the point Alan was making about partners. They have partners, existing incumbents are, whether they're good, bad, or indifferent, they're a known entity. They have they're a low cost of acquisition, and they can squeeze price very hard. Equally, they've got everything to lose. So if you can find the right incumbent and the right people, partnering with that incumbent can really unlock the opportunity and accelerate it. So I think beware the incumbent, but at least know the incumbent, I think is something that we found really helpful and really important.
Fantastic, thanks, John. Over to you, Alan. Same.
My final thought would be that for a small growing or scale up company, sales is not just the job of the salespeople, it's the job of the entire company. And it's really important, especially in large organizations where every element of the relationship is embedded in each person in the company. And the salesman is there to manage the relationship, not sell the product. And so from the CEOs to the CTOs to the CFO to the delivery people to support people, they all have to have some point engaged with the client in the process of understanding what you do and getting it into the project. So, you could be a very technical CEO with a strong salesman, but you must be an evangelist. You must be in there being supporting the salespeople in the process, but also learning about everybody else in the company, because the more contacts you have in a business, in a project, the more resilient you are yourself, because they will change. And so you have to be able to adapt to that.
And I think that change piece is also important because, as I said before, in some corporates, people move jobs every 2 years. So making sure that you do have the right people and the right stakeholders is really important. And I think that it is a hard market, but make sure you keep your contact book close. So do pick up the phone, try and have those meetings, because actually in 12 months time, that's when things may pick up again. And so actually it's those that have been in touch that will have a depth of understanding, because you've taken the time to understand the buyer's problems, what they need to do to make sure that they can bring your product into the business. And ultimately, we're in a commercial environment and we're here to do business. So we want to make sure that real problems are solved and real business is done. And we understand that companies don't always have as much time. So we do try to speed that up as much as possible. And I think the Fintech pledge helps with some of that. Helps in enlightening on what some of the processes are, but it's not going to be it's not the end, it's not the be all and end all, in the sense of you still need to do your partner and stakeholder management work. So yeah.
Wonderful, thank you, Adiza, and also thank you, Alan. Thank you, John. It's been a really sort of fascinating, nearly an hour or so. I'm going to hand back over to Peter Gillingwater, but it's been a pleasure. I hope everybody found this session really useful.
Thank you, panel. I mean, this could have carried on for another couple of hours, to be fair. I mean, selling is pretty hard, but once again, with the right expertise and knowledge, then you can make it a little easier. But Don't forget to obviously go and meet the speakers. They're around for the next 30 minutes, taking your questions. And one thing to remind you, you can move from room to room as well. And also, even if you're in a room where someone's in a question and answer situation, yeah, you can obviously listen in. That's absolutely fine. And then the person from Newfound will help sort of get you to ask your questions as well. So just wrapping up this panel and then moving on to the second panel of the day, and it's all about innovation. We've got three great people sort of leading that discussion. Jeremy Bassett from CoCubed, who will be actually leading the pitch day. So good for you to meet Jeremy. And then Ellie Shuggy and Alex Barkley. They've got tons of experience around innovation and what larger fintechs large corporates look for around innovation. So this is once again, it segues nicely in terms of the session. So I'll let you head towards the meet the speakers, and we'll catch up at 9:30 BST sharp. Thank you so much. Cheers.